Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today was Wednesday, June 6, 2018. The thought that I kind of want to talk just for a couple minutes, and really, honestly, I just want to talk a couple minutes and then I want to move on and just move on, period, is I'm reminded trading is there's a Seinfeld episode that Elaine and she's in the bathroom, and it's the spare a square type of thing, or is it sponge worthy, I think is another way of how she put it, or spare a square. So she's sitting in the bathroom and there's only like, I think there's no toilet paper in there, and the other one's like next stall over is like, can you spare a square for her? And what I want to get at is maybe that mentality is more of the line that you need to have in your trading. In other words, is it sponge worthy? Is it spare a square worthy? Is it really a good trade setup that you're involved in, or are you just, throwing it to the wolves and letting them have your dinner? Because I find that what I'm doing right now, honestly, I'm trading 45 tick days for 10 tick days, and obviously that's not a recipe for winning. If I'm losing 45 ticks and only making 10 on my winning days, there's a disconnect. Now there's a disconnect either in my trading or the market, and I don't believe it's my trading. I believe it's more along the lines of the market. In other words, I'm still taking the same signals, but the signals are not moving in enough profit to be profitable, in other words. So the average range of movement before a backfilling move, like if you look at today you have this insane 50-60 tick drop right off the inventory, and then it kind of meanders around, goes down. Believe it or not, it hits the Gann number. The Gann number today was 64.28 for those that follow the Gann signals that I have. 64.28, I believe the low at that point in time was 64.27 as I'm recording. So to get out at 64.38 with a 10 tick hit behind that, especially on the short side, you can expect the market can run Gann when it's close to it. So, but 1 minute in the inventory can be in an eternity when you're trying to wait around for that 1 minute to pass at TopStepTrader so that you can enter. Now I know in the combine you can join it, and I've debated about it before. Just set a bracket in front of the inventory on combine and just pass the frickin' combine on the inventory. So in other words, put like a 15 tick bracket long short and go at it, and see what happens. And like today, you would have been able to pull out 100 ticks on the short side just to get in, because the combine is going to get you a favorable fill. But is that cheating in a sense? And I don't want to go and get in the habit of passing the combine by having to do something that I can't physically do in reality when I hit FTP or the funded account. So yeah, I know there's a way around it, and I can pass the combine because, and just to get out of the combine, I mean, it's been tempting to get in prior to the minute that comes along that line. So not waiting a minute. And one of the things that I've been trying to be and stay disciplined doing is wait for 1 minute to pass before I get into the inventory trade. Now, what I have learned more times than not, as far as the inventory trade goes, you can't move to break even on this trade. Not until it hits a profit target that your chart is telling you, or like today with the Gann number getting hit, or 2P getting run. So it's tough not to want to go to break even when you've went 1P in your favor. Today 1P was 23 ticks. The market went down 24 ticks, and then it came all the way back. So my original short entry was at 64.77, I believe. No, I think I had one in front of it, but the one that I had was 64.77. If I would have held the 13 tick stop at that point, and maybe I got hit with a 13 tick stop to start with on the first trade, the second trade would have been able to run the 38 mark on the way back up, and long story short, could have been a winning day. There's always a way that you can look back at a trading day and you can say, all right, if I would have been perfect, how would I have handled the day? So where I was imperfect was moving to break even too quickly. And it's hard not to move to break even when you've got a 24, 25 tick gain on the table. Here's the tough part about the 30K, and also the tough part about the 50K as well. Trading two contracts with a little bit of room is very difficult to do. A $500 loss in any given day in the crude oil market is very easy to obtain, and it's really quick to get to if you add the second contract on. So trading that second contract on the inventory day is not a wise thing to do. Whether you're trading the 30K combine or the 50K combine, either one of those, you can rack up losses in a hurry. And before you know it, you can be down, and I know when I was trading the 50K, you can get down 60, 70 ticks in a hurry, day trading two into the inventory. So if you lose a few in a row, bam, 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 next thing you know, you're down 60, 70 ticks. If you lose three in a row today, it would have been down 36 ticks with a 13 tick stop. I didn't want to run with the full 13 tick stop. I wanted to run with 11. And that 11 cost me 22 ticks because I didn't let the market run. I didn't allow the market to, when I hit that 77, I think that one got out at like +1 or something. That I went down to 54, 53, 52, somewhere in that area, and then it came all the way back up to 77, 78, and then it went on down at that point to well, eventually went to the 28 mark. So life and trading is not easy. That I can tell you. I am. I know Kip asked me how much money I'm in at TopStepTrader. Honestly, I don't know, but I know that I've given them more than I've made. So I can tell you that without a doubt that I have given TopStepTrader a hell of a lot more than what I've made. But what I would continue to tell you and tell myself is that, am I better off here than on my own futures account? Until I can control my own self-discipline, this is the best place for me. Obviously not for you, or maybe that watch me, maybe your trading discipline is a lot better than I am. I had to regress back to the 30K account because I can't trust myself in the 50K. So I'm at a different point in my life because of, well, honestly, because of the financial situation that I'm in. You know, I don't pull any punches when it comes to that. I lived pretty much on a fixed income, and I got to beg, borrow, and steal sometimes to get money to help in an area that I made our family lots of money. And I just finally got over to the point where, you know, I'm over it. You know, to know that you've done it is great, but not to be able to capitalize on things that you see come in, it's tough. I mean, honest to God, it's probably the hardest thing that I've ever had to do in my life is to watch, you know, my wife slaving at work, and I'm making, we're making enough to get by, and I pull in enough money outside with insurance and other things that I do, but, you know, something's got to give, in other words, sometimes. But anyway, so spare a square is the thought process that I want to kind of leave you with today. Sponge-worthy, spare a square. So is the trade that you're taking on, is it worthy to hit the button? So sometimes I would tell you, I think you more times than not, that a lot of these trades that we take are not worthy of pressing that button and getting in, because if you're coming from a wishful, hopeful type of mindset that you're hoping this works out, that you're wishing this works out, honestly, that's the time that you have to physically get up from your chair, or if you're standing when you're trading, you got to get up and you got to move and get out of the market for a while. Honestly, I can tell you what's going on in my trading. In the crude oil market, the market is acting in an erratic behavior. Yes, it moves a certain amount, and then it backfills all the way to the break-even point or a little above, and then it continues to move in the direction that you think it was going to go in. That has been a tough pill to swallow, because there is no safe 1P environment to be in when it comes to trading in the crude oil market right now. There is no safe, I can move to break even at this point. There isn't that. That's not the environment that we're in the crude oil market right now. The market is kind of, well, it's a scalper's paradise is what it is right now. If you're going after 10 ticks a pop with, whatever, you're probably, just bam, bam, bam. That's the kind of the scalper's paradise that we're in right now. It's not a trend-worthy market in more times than not. Yeah, there's some days that are trend-worthy, but more times than not, you're finding that the market's not following through with any, movement behind it. Or if it does move, it's moving prior to you getting involved in the market. And it might be at 2:30, 3:30, 4:30 in the morning, my time, you're waking up and you're seeing the market. Like yesterday, I wake up and I see, hell, we're already at the lows. So I had to wait around for the market to go up so that I could trade it. And that's a frustrating, and I'm getting better at it. So I don't know. I'm more, the older I get, and the more that I start seeing things, the more I'm thinking I've got to change my internal clock here to start taking advantage of some of the easier moves that are happening in the overseas markets right now. If you look at like something like today, you can go back and look at the highest volume bar that came in at 7:33 this morning, and from there to the inventory release, it was pretty much up. So from 7:33 through, within this case, 9:30, so about 2 hours almost, the market was up from that point until the inventory came out. And then once the number came out, obviously, it went down. But, there's some easier trades that can be made if you're just simply looking for highest volume bar and then waiting for your signal to come in. So for me, what I'm going to do is simplify things down. That's what I have to do. Right now, I'm looking at the market as that we're in the summer doldrums now, and it's time to simplify my trading down to the bare bones type of things that I know work, and then just get out of Combine, get out of FTP, and then move into funded. And that knowing what I know and trading that type of stuff, I'm confident I'll move out of Combine, I'll move out of FTP, I'll put myself back into funded, and then the point is, when I get there, is to build that cushion. So this is good experience for me to I'm kind of to the point where I'm kind of pissed off right now, to be honest. And when I'm kind of pissed off, that's a good place for me to be in my trading, because I know that I'm at the point where I'm done taking it up the ass with the market for a while. That the market has given its best shot that it has to offer, and I survived it, and now it's time to kick its ass for a while. So it's a good place for me to be humbly. So, and I'm not saying that to not be humble, because I know I'm just going to continue, to be humble. Those that aren't humbled get humbled themselves, right? So I will continue to keep myself in the frame of mind that the market can still kick my ass in any given day, but I'm done trading 10 tick days for 45 tick days. So that kind of environment, I'm done. I'm done trying to, having 7, 10, 16 trades a day in a market that probably I should have only taken 2 to 3. So that's where I am. So simplify things down. Wait for a true signal to come in the market. If it's not there, you just got to wait. I mean, you just have to wait. Just got to be able to say, you know what, it's not there. If I choose that the 9 o'clock mark of the U.S. Open is my starting time, and the market has already done something at that point, well, then I have to wait. I got to be patient and then get involved with the market. And then trust that signal. And, it might be as simple as having the market run to 1.5p to 2p before getting to break even right now. So it could be something as simple as that. How I've been trying to toy with 2 contracts right now in the 30K account, that's kind of where the 45 tick came in the other day. And that's how the 45 tick day happened on another day too. So, and I know why I'm adding the second contract, because of the backfilling. I'm thinking in my mind, if I can get my first contract out at 1p, then the backfilling. So here's the logic behind it. Adding that second contract is that, all right, if I'm willing to risk, say, 10 ticks on 2 contracts, so I get 20. But on the other side of that, 1p will run 24, 25 ticks. Then that first contract getting 24, 25 allows me to hold the original contract at its original stop loss. So I don't have to move in to break even on that particular environment. So in theory, it sounds great. The problem is, in reality, is that it's tough to run a 1p right now. In other words, the market, once you get into, and that's why I trade the short side, it's still tough to get that 20-25 tick hit until a certain thing happens. So in other words, volume's got to precede everything for me. So what I'm telling you is that until I see otherwise, volume has to precede everything that I do as a trader at this point. Any trade that I take, maybe with the exception of Friday or CL pitch, well, CL pit's always off of volume, but on Friday the tendency is selling off right at the open. Outside of that type of environment, I have to wait for volume to precede the trade. And if I wait for that kind of setup, and if I miss it prior to the entry point, then I've got to be smart enough to stand aside and wait for a true setup to come along. And it might be a day that, that it ends up being a 1 tick trade for me just to get the day count in at that. So I've got to be happy with all right, it didn't work out. Let's take a 1 tick hit and move on to the next day. So in other words, take a $13.70 hit and move on to the next trading day so that we can get the day count in, right? Because you still got to get the day count. And this is where a lot of my struggles happening right now, is that I'm finding myself up, like I was up 900 and 1,000 on one, I was up 1,600, 1,700, 1,800 on another, so it's those swings that are getting me right now. It's because the environment that we're in the crude oil market is just not sponge worthy. It's not spare square worthy right now. A lot of times the trades are just stupid. There's more times that you need to be sitting on the fence, sitting on your hands and waiting for the market to do something that's spare square worthy or sponge worthy, right? So I'll leave you with that thought right now. That's what I'm thinking. That's where my thought process is right now. And it's probably, like I said, it's a good place for me to be at this point in my life. And then the summer, as we run into June and July, into August, I mean, we're coming into what's called the dog days of summer. Trading, the volatility starts to wash up, the velocity, the volume, all that starts to come in a little bit. We'll see. All right. Talk to you later. It's Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. See you on the next video I put together. Bye for now.